Welcome to Byte-Sized Tech. All right, today we are tackling a real head-scratcher from the world of AI. You have Nvidia, right? The undisputed king of AI chips. They just posted a blockbuster, knockout earnings report. But the market's reaction? Yeah, not what anyone expected. Let's dive into this paradox.
So get this. The company comes out and delivers a staggering 56% revenue growth. Now, for a business that's already worth trillions, that number is it's absolutely extraordinary. But instead of the stock soaring, it actually dropped. It's the kind of thing that just makes you stop and ask,
exactly. What in the world is going on here? How can a company be firing on all cylinders, just crushing it, and still see its value take a hit? Well, the story is this fascinating mix of Wall Street psychology, high-stakes geopolitics, and just relentless innovation.
Okay, so the first clue comes from the wild world of Wall Street trading. There's this surface-level explanation that traders pointed to right away, but as we're about to see, it's kind of like a red herring. And it all has to do with something called a whisper number.
You see, a whisper number isn't the official guidance you read in a press release. Nah, it's the unofficial, super high bar that's set by hedge funds and trading algorithms. It's the number they really expect a company to crush, and that's the target that drives that initial gut reaction in the stock price. And here's where the problem seems to be. Nvidia guided for an incredible $54 billion in revenue for the next quarter, but that whisper number, that unofficial target, was just a little bit higher, at $55 billion. So on paper, it looks like a slight miss, but trust me, that $1 billion gap is hiding the real story. To really understand what happened here, we've got to look past that whisper number and focus on the single biggest variable in this whole equation, China. The real story isn't in what Nvidia reported, it's in what they chose to leave out of their forecast. And here it is, the crucial point. That $54 billion guidance, it included zero projected revenue from China. Nothing. Nada. They took it completely off the books because of all the regulatory uncertainty. So once you factor that out, their guidance didn't just beat the whisper number, it absolutely blew right past it. In fact, Lawford Tangler CEO Nancy Tangler put it perfectly. She called it a triple play, a beat and raise. This wasn't a miss. This was an incredibly strong report that was just clouded by this one specific, very large geopolitical issue. And if you need more proof of the underlying strength, here you go. If you just strip out that China uncertainty, the absolute core of their business, the data center segment, is actually accelerating. I mean, think about that for a second. Growth is going from an already insane 60% in the first quarter to a guided 80% in the third. The engine is just running hotter than ever.
So why is this China issue such a massive deal? Well, it's because of this number, $50 billion. That's the potential annual size of the China market that Nvidia, right now, is unable to forecast. It is a massive, massive piece of the pie just hanging in the balance.
And that brings us right to the heart of the matter. This isn't just about spreadsheets and forecasts anymore. It's about a high-stakes balancing act between the world's two largest economies, with Nvidia stuck right in the middle of it all.
The situation is, well, it's complicated. You've got the US-China tensions that led to export controls on these advanced AI chips. Then, to potentially allow sales to resume, a proposal has been floated for the US government to take a 15% commission. This leaves Nvidia trying to navigate an incredibly tricky and frankly unprecedented geopolitical landscape.
So Nvidia's official response here is really telling. Their CFO has been crystal clear. Their cautious stance isn't a political one, it's about their legal duty to shareholders. She's on record saying there is currently no legal way for them to pay this 15%. So until there's a formal, written-in-stone regulation, they are taking a very careful, very measured approach.
And the thing is, the demand from China for these chips is it's immense. As analyst Dan Ives from Wedbush puts it, Beijing telling its companies not to buy Nvidia chips is like telling a kid not to eat the candy. The demand is just absolutely overwhelming. But of course, there is a very serious counter-argument. Former White House CIO Teresa Payton provides this stark national security perspective. Selling even modified advanced chips to China, she argues, is like handing over the keys to your R&D lab. It risks reverse engineering and giving a global competitor access to your foundational tech. It's a classic battle between commerce and national security.
So, with all this external chaos and uncertainty, where do investors find confidence? Well, they look right past the politics and they focus on Nvidia's core strength, its relentless, unbelievable innovation engine. This timeline right here
It says it all. The pace of innovation isn't just fast, it's actually accelerating. We just saw the massive demand for the Hopper chip. Well, Blackwell is just now ramping up. And they've already announced Blackwell Ultra for next year and the next generation, codenamed Rubin, after that. They're moving from a 2-year cycle to an annual one, which one analyst called, and I quote, unheard of.
And the strategic goal here is just brilliant. Each new generation isn't just about being faster. It's about massively increasing the performance per watt. And what that does is it makes building and running these AI models both more powerful and way more energy efficient. It creates this self-fulfilling prophecy where better chips enable bigger, better AI, which in turn drives demand for, you guessed it, even more powerful chips. And this is why the long-term investors see moments of confusion like this not as a crisis, but as an opportunity. They aren't focused on one quarter's guidance. They are looking at the much, much bigger picture.
You see, Nvidia's true dominance isn't just about one single chip. It's about a deep, competitive moat built around an entire ecosystem. Their GPUs, their networking, their CPUs, and, crucially, decades of investment in their software, CUDA. Competitors aren't just trying to build a faster chip. They are trying to replicate an entire integrated system that's taken decades to perfect.
And while, yeah, the big cloud companies, the hyperscalers are still their biggest customers, Nvidia is actively diversifying. We're seeing huge growth in enterprise adoption, and there's a new powerful driver emerging called sovereign AI. That's where entire nations are building their own AI infrastructure. That alone is already a $20 billion opportunity. This diversification makes their whole business that much more resilient.
So what's the ultimate prize in all this? Well, CEO Jensen Huang often talks about the long-term opportunity. He sees the total addressable market for building out the world's AI infrastructure as a staggering $4 trillion. I mean, even capturing a fraction of that ensures massive growth for years and years to come. So, in the end, it really all comes down to this single, powerful question. You have the chaotic, unpredictable forces of global politics pulling in one direction, and you have Nvidia's unprecedented, accelerating engine of innovation pulling in the other. Which force is ultimately going to define the future for the world's most important technology company? It's a heck of a question worth pondering.
If you enjoyed our deep dive today, please do us a favor and like, comment, share, and, of course, subscribe.